September was an absolute roller coaster. We had a very slow start, a fast middle, and how did things end up at the end? So I'm going to bring you all of that, plus looking forward a little bit as to what we should expect. I have a pretty high degree of confidence for what's coming up in October, November, and December. So let's get right to it. If this somehow is your first time looking at one of these market updates or going through it with me, brief intro to it. We're going to start with the past, have some good charts about what is happening now, and then we're going to go to the fun part and forecast what's coming. And I am a very data heavy person, so buckle up if that is a new approach for you. So mortgage rates are down. We're seeing around 6% pretty consistently across the board, down from about 6.25 in the middle of the month. And wait until you see where we were this time last year on the next slide. Inventory is up a little bit to 250, up from 232 at the beginning of the month. Totally normal. Inventory usually jumps up in September, typically jumps up again in October, where we will see our peak. And that's roughly 3 to 4% usually above where we were here. So I'm not expecting that to get too crazy as much as I would love to see it. Days on market still extremely stable. Prices are very stable as well. The single families are higher. You're going to see a big number there, 15% year over year. That I've explained in past videos, but the short version is single family homes are generally high in price and low in the amount that sell in a given month. So there is a little bit more variation. But that said, that is going to continue to be on the rise. So just last month, again, we were at 6.5%, generally speaking, for 30-year mortgages. A year ago, we were at 7.5%. So we've seen things improve pretty markedly since last year. Now, inventory again up 10 since where we were last year as well. Nothing to write home about, but this is the first time, and I told you I'd only talk about this sale to list price ratio if I saw something interesting, if there's a trend developing. There isn't a trend yet, but this month in September, typically we're seeing these in between 95 and 97-ish%. Jumping up to 99 and 98% is very, very telling. Again, we had a strong month in September where people, generally speaking, were having to pay pretty close to asking price. It's not always the case, but based on what was closed out, what's in the system, right, in the MLS, almost everything has been marked as sold that should have been. There's just a few lagging. So this isn't the final number, but it's going to be pretty close to it. So that was a surprise. And that's not something that I expect to continue forward from a trend standpoint. You shouldn't expect to have to pay asking price for things. And I'm going to give you an example at the end of a property that we just got under contract with a buyer of mine, a client of mine, that, in my opinion, is an absolute steal. So new listings, again, August, it turns out, was a bit of an anomaly. The way that we look at this is every previous September, we saw about 10 to 15-ish% more new listings than we saw in August. But when you have a huge spike like we did in August, which we hadn't seen in the past, what happens? It turns out it generally is going to stay in line based on the average that so far that year, what we should have expected in September. So I was looking at it maybe a little bit the wrong way. September landed about where it should have been based off of how September's hit according to the average of that year. So January through August, take the average, and generally you can predict where September's going to land. So I'm going to bookmark this and use that again for next year, see where it hits in September specifically. Pending sales, again, a pretty solid month, a little bit down from last month, but that is normal compared to last year, still trending directionally where we were. And funny stat, if you look at the last 12 months compared to the previous 12 months, not calendar year, we have had exactly the same amount of homes go under contract. So if that is not consistency, I don't know what is. Closed sales, again, very, very consistent here too, pretty level across the board. Now, single family, I talked about this in the mid-month market update. Yes, months of inventory is continuing to creep up a little bit, and I do expect it to stay pretty high unless we start to see a lot of the single family new constructions come off the market, which is what we saw at the end of last year, which really dropped things back down, as you see in this chart. We'll see if that happens again. I'm not going to say it's manipulation of any kind. It's not, but I just like to provide the context for why things change. And as long as nothing changes, this should stay pretty high. And that should lead to some decent deals coming up. Now, again, you see a big jump here in the price point. And again, I've hit on it, I think, in every video, but we had really one extremely low month that really dragged our 12-month average down. And that's what I do for this 12-month rolling average. So once that fell off, We jumped back up in April, it looks like. But then since then, we had a couple big months, mostly due to high-end new construction homes selling, and it really brings that price up. And even if we look at this through a mean instead of the median, again, the direction is still moving in exactly the same. So days on market still very stable, right? Basically stable for almost the last 2 years. We should stay in that ballpark. Months of inventory for condos, again, extraordinarily stable and bankable. It's been a joy, I think, being able to just know what's coming as far as the condo space goes. Very stable for the last 9 months in terms of that median price. And the mean, again, is the same thing. Days on market, very, very good. Now, speed, we started, if we look at that mid-month based on where we were with the slow start to the month, this speed was almost pushing 3. And what this means, again, is for one home to go under contract, we needed 3 new listings. Now we see it at the end of the month drop just below 2. And if we look at these averages, again, we're staying right at about that 1.75 where we should be, where we were in 2019 pre-pandemic. So we are going back to normal is what I take from all of this. Now, last but not least, where are we going? And this is the fun stuff. So mortgage rates are likely to continue to creep down a little bit. The fact that we are seeing them around 6, maybe that's best case scenario. It's not something that I would be sitting here saying, hey, you know what, if you're looking to buy, hold off for the next 3 months because rates may go down a little bit more. That's not bankable, right? That's what some people may think. They hear that, hey, the Federal Reserve is predicted or forecast to cut their rate 1 or 2 more times this year. That does not always mean that the mortgage rates will go down. That's not how it works. In fact, when we saw this cut in September, where the Fed cut the rate 50 basis points instead of the 25 that was baked into everything by all investors, bond market, all of that, mortgage rates actually crept up. So rates are in a good spot. If you see something you like, jump on it. If you can negotiate it for a good price, jump on it. There are many options for taking advantage of future lower interest rates. I had a client yesterday ask me about buying points, right? Paying down the rate. If you are fully dedicated to staying in this home for quite a long time, it may be worth considering that. But I've had clients who thought they would be in a second home here for years upon years, only to sell after 2 or 3 years after life changed. And they paid, $20,000, $30,000 up front to buy down their rate. And that's money you're never going to get back. So definitely talk with a lender. I'm happy to, again, I'm no lender here, but happy to give you stories and advice if needed on that front. But we should stay well under 6.5% for the rest of the year. Would not be shocked if we get down into the high 5s by the end. Inventory, again, totally normal. We've seen 8% fewer new listings so far this year, January through September, than we saw last January through September. So some people may look at the total number of home sales, homes going under contract, lower than last year and say, oh, the market's slowing down. But really, we don't have as many new listings, so we can't possibly sell the same amount of homes. So if you look at it through that lens, yes, we've had 4% fewer homes go under contract, but based off of speed metric, we actually should have seen fewer homes go under contract if the speed was the same as last year. So what that means is we have a better market slightly, right? This is basically what we should have expected. And 2023 was my template for this year as far as predicting how everything was going to pan out. And that continues to look like a solid baseline. So deal season's here. I'm going to tell you a quick story. I preach to anybody who asks, when's the best time to buy? Number one, it's when you find the right house, because if you've been looking through homes here or you're just starting the process, whatever the case may be, you're only really ready when you find the right house. And that may take a very long time. It may be the first one you see, right? It's really hard to know. So the right time is when you find the right home. But if you are willing to give or take on some aspects of a home, on a location, whatever it is, you're just looking for the best deal, right? You're looking for the clearance rack situation. The fall is the best time, not September. September is a very another strong month. That really is the fall market. Deals are had between October through the end of December. So this is the time to buckle down. And I told a different client just yesterday as well. Generally speaking, the deals that you're going to find are most likely to be on homes that are already on the market versus ones that are coming in October, November, December. Let me tell you why. Now that showings are going to start to decline even more than they had been, right? Generally across the board, showings were down compared to years past. sellers start to get a little bit more nervous, right? Some have goals where they want to sell by the end of the year for one reason or another. Um, some, the election gives them the heebie-jeebies, right? Depending on how it looks like it's going to pan out. There's a lot of reasons why people sell. And ultimately, only the seller knows what they're willing to accept. Even their agent, right? The listing agent. We don't know. We have no idea until push comes to shove what somebody's willing to take. So the longer homes sit on the market, the better your odds as a buyer are of negotiating a good deal. So that's why this time is so important. But again, to wait and then try to lowball and say, hey, I'm going to offer you 20% less than what you're asking. I know you just hit the market yesterday, but it's a good deal. You should take it. Terrible approach. Low likelihood of success approach. So if you're looking for a deal, reach out, right? I keep my eye on this stuff all the time and have conversations with a lot of listing agents, some sellers directly, about what their mentality is on these different properties. So I have a good idea of which ones may budge, which ones won't. So story time, almost right across the street from me. There was a new construction home. It was a development, 3-unit building with a commercial unit and 2 residential above. That top floor sold fairly quickly, all things considered. Top floor has some bonuses, has a bigger deck, has an elevator, has some good stuff. But that middle floor was just sitting and sitting, and they dropped the price and they dropped the price, and the developer offered incentives to buy down the rate, to do other things, and nobody really was jumping on it. They dropped the price to where I think it was an appropriate point about a month ago, after being out there for a very long time, but it's still there. One of my clients came down, saw it, loved it, made a pretty aggressive offer of 5% less than the comp that just sold a few months ago, and it was accepted. So they're going to be getting into a great spot in a great situation at a great price because we've been looking at things for the last 3 months. We've been active in the market, so they knew what they want and what they didn't want. And it is different than where they started, both in price and a lot of factors, actually, but it's a good deal. And that's really what drove it home for them. So deal season's here, and this is the time not to be shy. This is the time to reach out, whether it's to me, whether it's to an agent you're already working with, whomever it may be, and get things started, because you don't want to be sitting there in January and February looking for new homes, right? Coming down here for the first time in months. Your agent shows you comps of what sold 2, 3 months ago in November, December, and you go, oh, well, I would have bought that. Let's wait for one at that price. That's not how it works. Once we cross that calendar year, demand picks back up. Sellers know spring market is coming. People are going to want to be in for the summer. There's a lot of psychology behind it. So hopefully this hits home, and hopefully you reach out sooner than later. Now, I originally months ago said, hey, I think we're going to hit 300 homes on the market as far as inventory goes. I no longer think that's going to be the case. We generally end up seeing about 3 to 4% on average more total inventory or peaks than where we start the month of October. So that's not even going to be close. We'll see if that pattern holds true. Again, I adjust on the fly every 2 weeks based on the data, based on what I'm seeing. But if that holds true, I do not expect overall prices to come down. Again, I do expect there to be some deals out there over the coming couple months. But beyond that, the market is very, very strong. It's very, very stable. Yes, there's a lot of external circumstances that could impact things. Generally speaking, Ocean City holds up pretty well, regardless of those circumstances. Elsewhere in the nation, you've seen prices come down 5, 10+%. Now they're starting to rise once again. So it's an uneasy balance, but a balance nonetheless. And it would take a lot to really shift things much more favorably than you'll see over the next few months. So with that said, any questions you have, if you want to bounce ideas off me, whatever the case may be, here are all the different ways to contact me. Cell phone is generally the best. Texts are preferred. But that's it. So I hope you found this helpful. I hope you really take this to heart, that this is deal season. There are not too many clients remaining that I'm working with that have been looking for more than, I'll say, a year or so. Most of them have gotten in, or hit the eject button and just said, this is not for me anymore. I can't do it. I missed my shot. So here to help however I can. Thanks for hanging out with me. As always, I'll see you next time.